We are live.
Good morning, and welcome to the ISO 222 briefing session. We're just waiting for attendees to join, so we'll give them a few minutes before we kick off. So just bear with us as we await the rest of the attendees to join the meeting. Thank you. I'll give it a minute more, and then we'll kick off. Thanks. I think before we kick off, let's just do a sound check to just make sure that we come across clearly on the other side. So can you give us a thumbs up if you can hear us clearly on your side? Thank you. Good morning and welcome to our ISO 222 Empowering Corporates in the Evolving Payments Ecosystem session. Thank you for joining and welcome to this session, which will be one of our two sessions this week and maybe a follow-up next week in terms of how we plan to discuss and also enable communication and also awareness to our clients with regards to what's happening within the space, what's the impact, and how do we prepare you for the change that's coming ahead for this year and the years ahead in terms of the ISO 222 program. So I think first off, Annika, if you're going to go into the next slide, is that we're just going to go through an agenda item with regards to meeting the team, that's Annika and myself, and then going through in terms of explaining what is ISO 222. Not everybody may be familiar with regards to this. What is driving the change? What's the market drivers? Why is it important for all banks, customers, stakeholders to transition and be involved with regards to this? What benefits can we look at deriving out of this? And how do you look at it from a compliance and competitive edge perspective? What is the change impact? And we will end with regards to questions and answers at the end. But feel free during the session to post any questions in the chat, and we may answer the questions through the presentation. But if we haven't, we'll take the questions at the end and dive deeper into the answers related to that. Without further ado, myself, Preggy Govender, I'm the Global Head of Implementation. We look after all our client implementations, especially in terms of transitioning our clients across from a regulatory perspective, which one of these is the ISO 222 program, in terms of creating awareness of how you're going to be impacted through our system landscape, be it online, file upload, host to host, or Swift. And we'll take you through some of that just now. Annika?
Good morning, everybody, and thank you for joining our webinar today. We're quite excited to have this conversation with you. My name is Annika Damatos Preto. I am a senior manager in the transaction banking space, specifically around cross-border transactions, and also I take accountability for ISO 20022. So myself and Preggy, we work in partnership in terms of making sure that we have the ability to take our clients on their journey as well in terms of cross-border transactions.
Thanks, Annika. Now, if you look at ISO 222, I think some of this is about spelling ISO 222. Some of us know, maybe understand these from our Google searches or from communication from banks or what is happening out in the industry. But maybe for the audience that is present today, Annika, if you could take us through briefly, what is this ISO 222 and what implication does this have relative to our clients?
Thank you, Preggy. Yeah, I think for most of us, ISO 222 can be quite a daunting. When you start reading the information, it can be quite daunting because it comes across quite technical, which it is. Where we are today as financial institutions, and we've been on this journey since 2022, when a decision was made that banks need to start embracing ISO 20022 in terms of looking at the capabilities that it provides, where today, when we look at information that we share from a client to a bank point of view, that's limited in terms of the spacing, etc. And ISO is more of an open standard, and it's globally acceptable and recognizable. And it gives us the ability then to provide more information in our transactions, which our clients then can start using as well. But that richness also allows us then to start looking at what we can do from an international and cross-border perspective. And this is where the evolution is starting to happen, because now the open standard and having more information, we can start focusing on standardizing some of the content that's in a transaction or in a payment. And specifically, the focus at this stage is looking at payments. We will see that there will be an overlap from ISO from payments. Eventually, we'll move into trade, but we see that as future a requirement only. So payments is normally the one that kickstarts all of these changes. So yeah, I hope that sort of just gives a high-level overview in terms of what ISO 20022 is all about.
I think maybe in terms of drawing a view as to how this has come about, maybe on the next slide, if we can go through a view of giving us a view as to what took place, what brought this on, okay, and what is prompting this standard to be adopted across the world, and how does it filter through the various different organizations, ultimately to impact on the stakeholders and the clients that we have today that not only doing domestic payments in some of the countries, but mainly impacting cross-border payments across the world.
100%, Regine, and that is actually a very good positioning, because when we look at what we're doing from a ISO perspective, just go back one, there are regulatory bodies in place today, and where banks were in 2020, 2021, we've been under tremendous pressure from bodies like FATF Recommendations 16 as an example, and the Wolfberg Group, requiring us from banks to actually provide more information pertaining to transactions. And why is that important? Because FATF, which is your Financial Association for Transaction Monitoring, they expect for banks to have the ability to understand where payments originated from. So who's the ultimate person behind the transaction, and who would be the ultimate beneficiary in a payment. And this is especially important when it comes to cross-border transactions. Banks at that stage, the limitations that we had, because we're using SWIFT and we've been using an MT or a FIN format, it's got very limited space in terms of the type of information that can travel through the network. And that put a lot of pressure on the different regulatory bodies and also the regulators and the banks in terms of them. So what do we do then in terms of this? And this is how ISO was then put forward as ultimately the best standard to deal with this. So once that has been determined by FATF or BIS, BIS is your central bank group that manages the central bank standards. And also we've got Wolfberg, which forms part of the transparency policies that are being defined. All of that feeds into your central banks or regulatory bodies within countries. And then from that perspective, our central banks are then putting it down onto the local banks that are part of those discussions. And where they are required then to ensure that financial institutions within those markets actually apply and comply with the requirements from a FATF perspective. When we look specifically at cross-border payments and FATF, where we are required then to provide information related to a beneficiary, is that then we will be able to see where the transaction originated from and who's the ultimate beneficiary receiving the funds. And this is how it flows through the whole ecosystem.
I guess a lot of this is kind of aiming to kind of guard against things like money laundering, terrorist financing, and all of those kinds of initiatives to kind of drive better information flow in terms of ultimate debtor, ultimate creditor with regards to the flow of data. And I think these are the standards now. As much as we look at this being done individually by banks, customers, the international standard and compliance across the world gives us the ability for all talking the same language and providing and also sharing of information across the various different institutions. So thank you for that, Dave. In terms of the market drivers, I guess from a payment evolution perspective, there's a lot of changes that's driving some of these initiatives in terms of, one, being able to deliver a faster delivery, faster turnaround of payments. Some of this is in the advent of the domestic modernization with regards to things like PayShap, request to pay, instant payment mechanisms, and deliver payments in a much more streamlined and efficient manner. I think the other things, as you mentioned, from a regulatory requirements, FATF is driving this, and you've spoken about that briefly already. Swift GPI kind of creates some form of visibility and gives us, our clients, an enablement of understanding where that payment is during the flow from start to end, from the initiation from the payment bank being, let's say, Standard Bank, to the beneficiary bank or the ultimate beneficiary receiving payment. So I think maybe just to cover a little bit on Swift GPI, just kind of give clients an overview of how they can initiate this visibility and how they can get this, one, through maybe the Swift network, and two, maybe in terms of our platforms, how we're going to be ready for this in the near future.
100%. Thank you so much for that question. What we definitely have seen, because of the changes that's happening, especially from an ISO perspective, it actually makes it so much more easier for us to start pulling in our clients when it comes to the tracking of transactions and payments. And Swift has made it available for corporate clients to actually join or be part of the GPI for corporates, which actually means that when a client is initiating a cross-border transaction with the use of a UETR, or they use a unique entity transaction identifier, it gives us the ability then to track a transaction from a point that it reaches the bank until it leaves us and it goes to the correspondent bank until the beneficiary receives the funds into their account. Where previously we found it very difficult in terms of knowing when a payment reached the beneficiary, or if a payment is sitting with another correspondent bank, especially when it comes to cross-border transactions. Now, GPI gives us that ability because from a tracking perspective, the network can actually see when a transaction is moving from one bank to the next bank. And all banks that are part of this are required to provide feedback. And that feedback is then updated onto the network. And that information is then made available in near real time to our clients and the bank. So the client can then use this in terms of understanding, especially if they did a cross-border transaction, if those funds have reached the beneficiary's account. That would serve then also as a proof of payment, and it makes it so much easier for our clients then to go ahead and contact the supplier, etc., and then take the next step in terms of what's required. Equally so, if the client is expecting inward funds from another supplier or another payee, you will also, or the client will also be notified to say there's incoming funds for the specific client, and the client will be informed that this transaction is on its way, which really helps the treasurer as well. But this is how we're starting to find that it is time for us to modernize our payments. And we can only do that by embracing ISO 20022, by providing more quality type of data and information in our transactions to the bank. And this will help us then to make sure that we can enable clients on our GPI portal in order for the client to do tracking of transactions. We also in the process of enabling this capability for clients that are not on SWIFT, so that they would be able then to see the status of a payment on their front end, like OneHub, which we have recently launched. This capability will be available, so the client will be informed, this is your transaction reference, and once you get onto your OneHub, you'll be able to say, track my payment, and you will have visibility of where your payment is when it comes to cross-border transactions. So we're very excited about this, launching this as well from our side.
So the clients are going to be enabled to use either SWIFT, if they have a SWIFT membership, to be able to track payments through that mechanism, or use the bank's platform using the unique reference number to track the payments, and they'll be able to see this through the platform itself.
100%. So a corporate or a client that is already connected by SWIFT will have the ability, maybe a richer capability, because they will be also benefiting from tracing inward payments, where we as a bank, if a client is not connected by SWIFT and we provide a service via our OneHub capability or online banking capability, we can only inform the client in terms of when a payment has reached the beneficiary's account, but we cannot enable if there's any incoming funds to track those for the client. But it's so much better than where we are today, right? Don't you think so, Peggy? Because we have visibility and give the visibility to the client.
I agree, fully agree. Thank you. And why is it so important for this transition for our clients to be aware of what they need to be looking out for and what advantages they may take in terms of being able to enable themselves to be better equipped from an ISO 20022 perspective?
So what we like to clients to think about is that we have been on a journey of payments in terms of where payments are, and we have really evolved from doing telexes and manual payment instructions, etc. We're moving now to a world that we're talking about the next gen payment schemes. We're starting to talk about digital currencies, and what do we do then as a financial institution in terms of showing that we're also expanding and growing, and we know that this is where our clients want to go. So from an ISO perspective, what it gives the client as well is the real-time capability of tracking and tracing payments, but we're also looking at how we can make cross-border payments instant for our clients by using ISO data. And as we spoke a little bit earlier, the importance of ISO and data is that when a client initiates a cross-border transaction, some clients are concerned about not knowing if the funds were successfully received by the correspondent bank or the beneficiary bank. And this creates a lot of queries to the bank, and we need to then assist our clients to say, yes, we can see, we know that the transaction is in progress, etc., where now the client would have the ability of potentially tracking and tracing the payments real time. But because of the information that travels with the client's payment instruction, like structured address details, account number, and also the purpose of the transaction, is when the country that receives the instruction, the beneficiary's country, when they receive the data, is that country will then go and validate the information on the beneficiary side, by looking at the address details, does it match the client's name that's in the bank's ERP system? Number one. Number two, does the address also match the client's profile, and also in terms of the purpose of what the funds are for? And this is where we can see a change in the importance around FATF, for example, where the whole intent is to provide a more secure ecosystem for clients and banks and make it quite difficult for those any cyber risk or fraudulent transactions to travel across the financial networks. And this is where ISO becomes such an important catalyst for this change, and why it's so crucial that we start looking at the quality of data that we receive from our clients in order to protect it also at the end of the day when a beneficiary bank receives the instruction. And when any anomalies are being picked up, then those banks and entities can act on that far quicker and resolve it.
Okay. I think as you kind of gone through this, I'm thinking of the new financial industry language and commonality across the globe.
Yeah.
And how we all need to play our part in that to drive a consistent kind of delivery of the data across these different mechanisms so that we serve the purposes at the end, ultimately from an ultimate creditor debtor perspective, but ultimately in some form or the other for there to be some validation that the beneficiary that's entitled to this money is the correct beneficiary, for one. And two, it's within the nature of the business in which it's being conducted to drive the combat against anti-money laundering and the likes. Okay, thanks. We go to the next slide when you're talking about key benefits related to this. I think some of these things, it's about understanding how things have evolved over time. And I know that we spoke about in terms of a single standard, driving a common language across the different institutions and equally across from the originating ERP, treasury management systems and the likes. I think a lot of this is supporting an end-to-end automation in some form or the other so that clients can take advantage of originating some of this maybe through an automated integrated solution set and driving that integration into banks and then ultimately from institutions to institution. What else do you see as being the driver of these key benefits, and what is going to be something that our clients would kind of look to take advantage of?
Pretty, thank you. We see that there's definitely opportunity when we start looking at some of the key benefits in terms of where we're going and what the clients can start and taking into consideration, especially because of data and the quality of data improving, and ISO being a more international standard that's then going to be accepted across different payment rails as well. And it's seen as a good baseline. Because of that, it will make it so much easier for our clients when they make cross-border payments or domestic payments, that they will be able then to use the data elements in terms of what they do from their side in a much stronger way. So we do see that from a corporate perspective, our treasurers would be able then to have richer data in terms of the type of transactions that's being made, the frequency of transactions for inbound and outbound, because of what we can see across the different markets. And we also see that there will be a huge move and shift towards using more real-time API kind of connections in terms of payment, even payment initiation, but also for cash reporting capabilities. It is time that we move away from end-of-day kind of statements, for example, where we want to, for clients that is a frozen point in time by looking at an end-of-day statement. But we know that today everything moves so rapidly, and we need to take into consideration also what we need to do from a G20 perspective. When we do cross-border payments, it is so key that those funds reaches the beneficiary or the person in need immediately, that there's visibility and transparency when those funds are being released and that the beneficiary receives the funds. But at the same time, it starts opening up capability for us not to look at just account to account, but account to wallet kind of transactions as well. And we start looking at how we can even track then account to wallet kind of transactions, also using GPI. And we can see immediately how the transparency is coming to the fore. But for our treasurers, because of the consistency of data and information that then travels with the transaction, it will allow for our treasurers to start looking at how to automate reconciliation on their side as well, because all banks will then use the same references right across, and they will have consistency in terms of how they provide the data back to our clients, being it through our cash reporting capabilities, and then for the treasurer, when we provide the intraday statements or confirmation of debits and credits, this will allow for the treasurers or the reconciliation systems at the client side to feed this data in and start providing better forecasts in terms of what to plan for next and how to start maybe moving funds as required because of the real-time updates that will happen.
Yeah, I see a lot of this as being, the transition is not started only 2 years ago. It's been a little while now. From a local industry perspective, the banks have transitioned to XML formats. That means that data flow between organizations has been almost enabled, but the data is not always there for the flow to take place to our clients. And I think, as you said, is the adoption of these standards, not only from the institutions, but also from our end clients, will enable a richness of data flow to enable a better reconciliation, a better kind of streamlining of data so that clients can do things much faster and in a much more enriched way going forward. I think one of the key elements that we talk here in terms of benefits, and intriguingly, some of the clients may be looking to understand this, is how do we actually look at this kind of supporting payments on behalf of? Because as much as this has been something that has been available in various different markets across the world, regulators, especially in South Africa, has been pushing against this. But how does this standard drive an ability for us to enable our clients to be able to set up almost payment hubs in South Africa or anywhere else in the world and do payments on behalf of different divisions, different entities through a shared services to a central treasury or whatever the case may be?
And this is one of those very exciting things that we look forward to, and especially when you look at when there's a parent company that's required to make transactions or payments on behalf of their sister companies or moving funds. It makes it very difficult for our global treasurers in those instances to really keep track of what is happening with the transaction and where the funds have moved. And now with also the visibility of a transaction where the treasurer can then monitor the movement of funds, is that the client or the treasurer can say that they're making the payment on behalf of who is the debtor, being the ultimate debtor, and who will be the ultimate beneficiary of the payment. And in this case, we can look at a scenario, for example, if someone is just buying or selling a house. I've just recently gone through that. So when you do that, you have a legal entity that will represent you as the seller, and the buyer, you equally so. So when there is a deposit that's being paid, the legal entity will say, I'm making the transactional payment on behalf of Anneke, and the ultimate beneficiary being Craigie, right? So when this deal is then secured, my legal firm, when they release the funds, will say that the payment, the ultimate debtor was Anneke, and the ultimate beneficiary, even though they're paying the funds over to another legal firm, the ultimate beneficiary will be Craigie at the end. And this is what gives that visibility and traceability of funds as well, because then if anything does go wrong within the transaction as well, it does give us, from a bank and for our clients, the means of actually understanding where the funds originated from and which parties were involved in the transaction at the same time. but it makes it easier for our global treasurers as well to actually then, when they use payment hubs, when the payment is being made on behalf of the client, is it will show in the transaction that this payment was done on behalf of the client and who the end beneficiary would be receiving it. And this is what we refer to then as payments on behalf of. We're looking forward to launching this in 2026. At the end of March, April, that's when we're looking at launching this capability. But this is definitely something that we think will add a lot of value for our, especially for our global clients.
So ultimately, the regulators will see this as being information flowing in the messages that are being sent across, with both parties being represented, being the ultimate debtor, ultimate creditor in the message, and being able to trace those payments to who originated it, who the ultimate beneficiary is, so that will meet the requirements in terms of their specific needs from a regulatory control perspective.
100%.
Okay, thank you. I think in terms of compliance and competitive advantage, and if I read through some of these kind of elements here that talks about a horizon between today, 6 months, 6 to 12 and 12 months, I'm almost reminded or almost kind of taken aback in terms of some of this, is that almost putting the cart before the horse situation, because some of these journeys have started well beforehand with our clients, with ERP systems, and institutions complying with regards to this. In terms of adopting of the XML standard, I mean, if I look at Standard Bank, our adoption with regards to the XML standard may not specifically be the ISO 200-22 kind of changes specifically that is being enabled now, but the XML standard was adopted back in 2010, 2012, somewhere there. And a lot of our clients have adopted this as well over time. And equally, we have transitioned from an industry perspective across with regards to that. Now, what we're saying is that in terms of efficiency, compliance, and readiness, from a now to 6 months' time, it's where we're complying to FATF 16 regulation, improving sanction screening, meeting regulatory deadlines of being the 22nd of November this year and then November 2026, and reducing payment rejections across in terms of cross-border solutions. If I look at this, what I kind of reminded of is that some of these have already been adopted. Some of it is already been enabled and driven by our clients. And I'm trying to figure out in terms of going into the future, what does this bring? And I think it's almost a question that I'm answering myself in some form or the other, because some of these things have been done in pockets, per se, because the industry moved forward in terms of South Africa, and that maybe is a domestic framework. Our clients have moved forward. We as an institution, as Standard Bank, has moved forward. But the stakeholders broader in the payments value chain across the globe, we're not always all on the same page. So we may have had clients that actually have this in place, or also banking institutions that had this in place. But now that the full community comes together in terms of the financial institutions across the globe, now the sharing of information and the compliance related to the end-to-end becomes that much more beneficial.
100%.
Okay. So I think as we go through this in terms of the horizons, I think it's those in terms of some of the clients that need to transition to the new standard, whereas the benefits related to some of these from new versions of the ERP systems that are catching up with the XML 200-22 standards. In terms of going forward, I think the 6 to 12 months window is where we're talking about, and we'll cover that in terms of some of the changes going through in the next slides, bringing efficiency from a reconciliation, liquidity, and maybe ultimately integration capability. But going forward into 12 months plus, can you probably outline where we're seeing this being of benefit to the clients from an innovation and digital maturity perspective?
100%. So definitely where we see the benefit will start coming through. where today we are experiencing, or the clients are experiencing, a delay in their cross-border transactions or the processing of cross-border transactions and the delays around that. As you correctly said, we're aiming to walk the journey with our clients to improve the quality of data. Those payments are delayed because of the quality of information that we receive today, which causes then unnecessary stops when it's being screened at the AML level. Where payments are being paused because when they look at the address details for the beneficiary, as an example, when there's a PO box in there, is that the screening service then flags it and payments is being stopped. So that immediately is then creating a delay. And then when we start looking at information that related to the beneficiary again, if the complete name of the beneficiary is not in there, or the purpose of the transaction is not articulated in the transaction itself, again, that's being flagged. By moving away and improving the quality of the data, we will start seeing how cross-border payments start moving into an instant payment kind of experience. And this is ideally where we want to be, because it's so important for our clients to have that, because they move at a rapid pace as well. We want to get more into APIs as well and make sure that we can give the real experience from an API perspective also to our clients. But it sort of empowers our clients then to make the certain decisions instead of reaching out to the bank and raising a query, is that the client will have the ability to use APIs and asking for the information real time, and then act on that and really then engage with your transaction banker for other products or services and capabilities. We see it as quite important from that perspective, because what we want to do is then also make sure that our treasurers are in a position where they understand the risks, contact the transaction banker when they need to, when there's any movement of funds that's required, or sweeping across accounts, etc., whatever is required. But we empower our corporate clients with the APIs and the information, and allow them for that richer data to go into data models, which will then inform the treasurers what to do next. And this is what our treasurers want to see. It's very frustrating for multinational clients, for example, dealing with so many different banks. And every bank has got their own way of doing things. Every bank has got a different standard, different field to be used, and it makes it so difficult for our corporate clients. And ideally, with ISO 20022, this is where we all become part of an ecosystem that will not just have the same standard, but will improve the experience and remove the friction between where funds are moving and what's happening with the funds. So ideally, what we see is that it will drive a lot of digital maturity as well, where we can look at other digital kind of currencies and experiences. We need to prepare for stable coins, etc. Because without that, we are not taking into consideration the growth of our clients, and we need to bring that as part of our own growth in terms of where we go from an ecosystem into account. And this is where ISO is leading. So when a client gets to a point where they need to make a decision to upgrade ERP systems, ask the vendor, what level of ISO are you on? Are you compatible? And ideally is to upgrade to the higher version. That way, you will be able to get full experience in terms of data quality, data richness. And by doing that, it will put you in the forefront in terms of being able to do the necessary analytics that you would do with your own data, and improving that sort of experience from your strategic intent and where you want to move into different markets again, and understanding what the response times are, etc., within a global space. So that this is a journey. We do see this as a journey, but from a Standard Bank point of view, we acknowledge that it's important to bring our clients with us. Now, it's not just about the banks. The banks are reaching a huge milestone now in November, the 22nd of November, when The MT103 and 202s, for those who are familiar with the format, will not be allowed anymore on the SWIFT network, for example, and it will only be ISO 20022. What is important now is we bring the client into this ecosystem and we make sure that the client is now forming part of this journey, be part of this, how we see the rich data and structured information follows right through from where the client initiates and provides the information to the bank. That will facilitate the faster movement of cross-border payments, and we can deal with that. So this is how we see how Horizon 1 to post Horizon 3 will then take everybody forward in terms of where we want to be from a cross-border perspective.
So the adoption of these standards gives us the opportunity to kind of take advantage of solutions driven through APIs, and we've seen that in the advent of PayShap, and then also using AI and digital analytics to drive better optimized working environments.
100%.
I think maybe if we can cover in terms of where we're going and what is the impact relative to our clients, being this specific date called 22nd November 2025 and also November 2026, and what is required of clients to comply with relative to these various different timelines.
Thank you, Pregi. We have seen, because of the shift in terms of where banks are going, when it comes to data and information, that, and I spoke about PATF a little bit earlier, and the visibility around cross-border transactions and who the beneficiary is in the transaction and what the beneficiary details would be. We see that the markets that are the subscribe to FATF will start enforcing some of the structured address details that's required on the beneficiary side in order for them to be able then to validate the client information on their side so that they can process the current transactions much quicker and faster. When we start looking at what the changes, what does it mean for our client and where we are, because of the introduction, and this is not new, actually, is that the structured address and has been available on the network for a good couple of years, but we've observed that most of our clients are using unstructured kind of information, which means the data is running horizontally. So it's address line 1 with information and then address line 2 with information. And sometimes this information is very high level or it's being duplicated on another line. And that sort of pattern is what causes the AML systems at banks to stop and pause those transactions or flag them because of incomplete or information in there that cannot be validated and checked against our own list that we have. So with fully structured, what will happen is that you move from an unstructured horizontal way of presenting the data into a vertical kind of space where it goes into a logical sequence, as we can see here, with street name, building number, town name, postal code, and then country code in a logical sequence, as we would find when we go into Google and search for addresses. And what is happening is that because of some of the markets not being able to adopt fully structured addresses, if we look at some of the developing countries like India or China, there's certain places that do not have street names, for example. And the PMPG, that is the Payment Market Practice Group, then introduced a hybrid concept by saying, we understand that some markets, there are no street names. So instead of providing a street name, the address line 1 is still available. So the client can then still put information in address line 1 and then followed by structured elements like what is the town name, country name, or country code and then postal code, for example. And this is what hybrid does. So hybrid is a combination of structured and unstructured elements, but and hybrid will then be introduced, as we see on this timeline, will be available from November 2025. So it means that banks will be able to receive unstructured, fully structured address details, and I'm referring to beneficiary details in a payment. And then the hybrid is also being introduced to allow for the transition period to happen by November 2026. So if you decide, I can only do hybrid. If you go hybrid, then you're done with your change. You don't need to do anything post November 2026 because hybrid as a standard will continue beyond 2026, but unstructured will not be supported anymore. So unstructured will cease to exist. And we're not seeing this just on a cross-border and high-value payment systems. This will also move into our other type of transactions as well, will eventually phase out. What we also then observe is the markets are part of FATF recommendation 16 or FATF countries is that they are driving the acceptance of fully structured as the preferred format to be used instead of continuing to using unstructured address in a beneficiary detail. So why is that? If we look at when a transaction is being received by the beneficiary bank or agent, what is key is that those, the beneficiary agent, they would like to receive the complete information of a transaction. In other words, how the transaction was released from the client until it reaches the beneficiary bank needs to be untouched. Everything needs to travel with the transaction. Those markets are now taking a position in terms of saying, if they find that there's missing data, that this could delay the processing of a payment because it means that they need to then query the bank where the transaction came from. In this case, it will be Standard Bank, for example, to query the client to confirm the address details or provide additional information in terms of the beneficiary. And this is the delays. These are the delays we're trying to prevent, right? Other markets are also saying that they actually do not want any payments to stop because of missing data or bad quality data, because of what's happening in those regulated markets. Ideally, the transactions should carry the correct information, and it's not as complex as what we're looking at here as this example. But this gives us a good indication what is the best practice in terms of what a fully structured address needs to look like. But in a moment, I will share with you what is the minimum requirement in terms of complying with that. What we are driving with our clients and a message we really want to convey is saying that when you are doing cross-border transactions into markets like Singapore, China, India, it is important that those markets expect to have a fully structured address for the beneficiary and also the purpose of the transaction. So the purpose code needs to be in there in order for them to make sure that the transaction will STP at least from their side. And this is what we're trying to highlight. We're also trying to want to highlight with the clients and saying that if you are using unstructured address details currently, is that you need to go on a journey, you need to look at the information that you have relevant to your suppliers or vendors and update your ERP system or your supplier vendor system that you use on your side with the correct address details that's on an invoice. And that will give you the fully structured information as well. So when you do your cross-border transactions and your data is updated in an ERP system, then the transition of passing that information onto the bank, being it through host to host, or file upload, the details will be complete and at a level where we can formulate and format that transaction on our side to send it to the corresponding bank on the outward leg. And that for us is quite a crucial element in terms of what we want to assist our clients with for the next period of 12 months.
I think we'll go into the minimum requirements and what is expected of our clients from both a structured address perspective or hybrid address, and also in terms of purpose code for the payments itself. But I think, right now, if I kind of consider a lot of clients, there's a lot of confusion as to which dates clients need to comply with. And I know a lot of clients are looking at this and saying, okay, effectively, we need to comply by November 2026. But there is something that's driving the 22nd November 2025 deadline. And I think we need to cover that in a little bit more detail for our clients, because some of this is also a situation of a deadline being the 22nd of November 2025. As much as some of this becomes available from 22nd November 2025, the countries, the likes of China, Canada, UAE, India, Japan, USA tax, and UK property is driving the requirement of structured address from November 2025.
Mm-hmm.
So the message that I'm hearing is that clients that are making payments to those specific countries needs to comply with a structured address and a purpose code post November 2025 as a recommendation from ourselves, because to prevent the beneficiary banks from either rejecting or delaying those payment completion on their side. I just want to kind of clarify that, because effectively what we've got is a view that says if a client is not doing any payments to any of those jurisdictions we mentioned, then they're fine to transition to either a hybrid or structured address by November 2026.
Correct.
If we are got clients, or we have clients that are doing payments to Canada, China, Bahrain, UAE, India, Japan, USA tax, and UK property, needs to comply by November 2025 to prevent any rejection of payment from the beneficiary bank. But also what we are saying relative to that is whatever information we receive, we will pass on.
Right.
We are not going to reject that on our side, other than checking that information is not duplicated, meaning that we got a street name multiple times in multiple fields. It needs to be structured or unstructured or hybrid relative to the data elements that speak to those various different line items.
100%. I'm pretty on that note too. We're talking here about a physical address, not PO Box. So PO Box is not deemed then to be a valid format. And I think why it's important to note that, because if there is a comeback, and we need to get the law enforcement involved, is that will serve then as what we have or what we have received in terms of potentially an investigation, and having a PO Box is not going to be sufficient in terms of any law enforcement then to be able to go and investigate should there be a fraudulent transaction. So those sort of things are just very important in terms of data quality. And also putting one-liners in that doesn't make sense. It does unnecessarily stop and pause a transaction, but I think it would give any person kind of a level of confidence, knowing that even though I potentially have not met the supplier or the person that I'm dealing with, but having a fully structured address because of what's on the invoice related to a business or a company, by providing that information in a transaction, when it gets validated by that beneficiary's bank, if there are any inconsistencies, at least we know it will be flagged. Especially in today's world, where we know that fraudulent transactions move very quickly, and we're also exposed towards cybercrime, etc. So it's just so important for our clients then to make sure that the information that you have is to use that. What we're also doing from our side is that we will On our online banking capability, we will help or assist the clients when they capture transactions on the outward side. And we see that the transaction is destined, for example, to Dubai, is that we will be able to display the purpose codes for Dubai, but we'll also encourage the client just to make sure that the address details are being provided so that we can ensure that the outward transaction is compliant then. This will also allow the clients then to actually on a beneficiary list capture or store the additional structured address details of the vendor. Should the client always use the online banking for cross-border payments, it will help the client with future payments to the same vendor or supplier.
Okay, I think what will be beneficial in terms of understanding for the clients is what is the bare minimum required for an address, and maybe we can go through that in the next slide to kind of position that.
Thank you for that. And Priggy, as I've mentioned, we see the big change happening where we move away from providing data horizontally and where we're starting to look at data being presented more in a vertical way. And what we recommend as a minimum, and this is not just a Standard Bank view, but what we see across all the markets, is that when a street name is available, is provide a street name. The town name is the next key one, postal code and country. Those are the minimum requirements, and that is sufficient for a structured address. If you have the building number, that's even better, is to include that. But if it's not there, it's not critical. And also the bonus, what we refer to as a bonus requirement, is in certain markets like in China and Brazil and India, they also require the province where the transaction or the province needs to be mentioned in the address details as well. And that just ensures that those payments then will reach the beneficiary's account, because it makes it so much easier for the banks to validate and process the transactions as they come in. So those are to try and keep it short and sweet, that we don't look at the 14 elements for a structured address, which is really, it's a lot. We recommend a minimum of 4, except when you do payments into some of these other markets like China, India, and Brazil, where it's highly recommended that the province is included to prevent delays on payment.
Okay. I think one of the things that you mentioned is that if the beneficiary has a global legal identifier, entity identifier, or a business identifier code, they can use that in terms of the payment to the beneficiary address.
100% correct. And that means then that you're not required to provide the physical address details as the GLEI, or the Global Legal Entity Identifier, encapsulates all that information already. So the bank then uses that by looking at the LEI that comes through, and it verifies, validates, and then the transactions being actioned. So it reduces the need for actually providing a physical detail, because we as banks, we subscribe to these data elements. Again, it's about data. It's about how do we streamline, how do we make it fit for purpose. And this is one of the big benefits around when we see how markets and clients start moving over using LEIs or big codes instead for certain clients. It takes away the necessity to have physical address, because all of that is already captured behind the GLEI.
Okay, correct. I guess our specifications will kind of position that. Maybe in terms of purpose code, if we can just quickly go through that there.
Certainly.
In terms of understanding what that looks like.
Okay, thank you so much. And again, what we need to take into consideration is the importance when we do cross-border payments, the need to include the purpose payment code. And when we look at this example, what we have provided here, we just encircled the one example, like we say the purpose of the payment is when we look at the type of transaction, you can have SALA, which is for salaries. In this instance example, we're using a PPL as the code of a transaction, and that is for the purchase of real estate for the specific market or in Dubai or UAE. And they have their own regulatory codes as well. And by including that information, it makes it so much easier for the transactions to move through the different processes in a bank, where it's not required for it to stop all the time before it's being validated and then released into the Benny's account. And what we've done here is we've highlighted where it will fit in and how does it fit in within the ISO space. And we have also updated our own messaging information guides for the clients to indicate where this information will be traveling in to make it easier for changes that needs to happen.
I guess this is not required by all countries, but those countries that require this seemingly have their own list of codes. And this is not a common thing in terms of the codes across multiple countries. Yeah. So right now we have codes specific to various different countries?
Yes, we do. And what we've done is that we have compiled a list of especially the countries that are requiring this information from our clients to make it easier then for our clients to use it as a reference guide. We will continue to update that. We have this information available, so it makes it easier for the client. And if maybe it is just a once-off payment to India, that the client can use this list to identify the type of transaction and then just make sure that the information is provided so it prevents the payment from stopping or unnecessarily at the beneficiary's side, or raise other concerns that we receive. But yes, unfortunately, this is one that I would say, if anything, from an ISO perspective, if we could have managed to get all countries to align to use a common code right across the world, it would have been great. But that is not, at this point, that is not where we are today. So we have to respect each market in terms of what they require to get payments over the line when it comes to cross-border transactions.
I think this is kind of closely aligned to like BOP codes in South Africa.
100%.
And compliance to various different countries having different BOP codes as well. I think maybe in terms of next steps, can we kind of just discuss in terms of enablement and preparation what we need to do? And I think one of the key elements that I'm hearing is from a preparation perspective is for our clients to be kind of analyzing the data that they store within their line of business, ERP, treasury management systems, and ensure that those elements that are stored complies with the minimum requirements, at least for a structured address or a hybrid address, and that they can actually fulfill those requirements as we go into this transition in terms of the ISO 20022 standard. What are the other elements that you foresee us being prepared and our clients being enabled for in the near future?
Well, most definitely, the structured address on the beneficiary side is really crucial. And as we've spoken about, we've spoken about the purpose codes, tax information. Some markets are also starting to say anything related to a tax payment must be included. We see this shift, especially in the US, if a client needs to make a tax payment to the IRS, there is a specific format that needs to be followed in terms of that sort of information that needs to be carried through that will ensure that the payment is processed in time. The US are taking a stance in terms of saying that if the tax transaction or payment is not conforming to the standard, is that it will just be rejected. We also see in other markets like the UK, where any transaction that relates to a property, it's a maintenance or paying for rental, or it is purchasing, it needs to carry the purpose code as well. And this is one of the key things from a UK point of view, that they want to keep track of those sort of transactions on their side. So it is important for their markets. We do see as quite a few markets have very specific transactions that they want to monitor. Some markets, they are interested in knowing the transactional purpose of the payment, to see if there's tax evasion that's happening as well, but also to ensure that the funds are being used for what it's intended to be used. So for us, we want to make sure that we advise our clients accordingly and helping them on this journey, because we know how important it is for them that when they make those important transactions, that there are no delays, there are no queries, there's no comeback, and that the client is confident in using our recommendations that we make in order for transactions to be processed on time.
I think with clients using online systems, they're going to be prompted for the data, and it's necessary for the data to be captured within their systems. They have easy access to that to complete the information as it's required when they're processing this via online platforms. I think key to some of our clients is the integration capabilities and where they consider in terms of either early adoption or complying relative to November 22nd this year, in terms of payments to those countries that are more stricter from a compliance perspective in terms of a structured address, in terms of those countries that we mentioned earlier on. How are we preparing ourselves to be ready to be testing with those clients should they adopt and transition to this format during the next few weeks?
Thank you for that, Preggy. And we are aware that there are quite a few of our clients that are already quite proactive. And what we can do at this stage, and what we are encouraging clients when they want or when they're ready, is when they are ready to send us files like via host to host or file upload, if they can share the file with us up front, and we will be able to then have a look at the information and data and confirm if we can see the structure of the information is correct, and provide the client with a feedback on that. That will be the first level of testing, if I can, or enablement that we can refer to, and then we will also invite clients, if there are clients that are wanting to actually test with us end to end. If you make payments into SADC or into Dubai, for example, and you're willing to be one of the friends of our program, and you want to be participating in that, please do reach out to us, because we would really appreciate if there are clients that want to test with us the end-to-end cycle, where you can also get the level of confidence that everything that's being done and the changes you've made on your side meets the minimum requirements. So those are the testing phases that we look at. So obviously we're encouraging clients to start looking at this, and we know that the 25th or the 22nd of November is a key milestone for us from a bank point of view. We want to give the clients the level of comfort that if you are on a later journey, if you're not impacted right now, based on what we discussed in those highly regulated markets, and you're only planning to do your changes later in 2026, is that everything will be in order. It's fine, because from a Standard Bank perspective, we'll be ready to start receiving those updated structured addresses or payment purpose codes from yourself when you're ready, anytime from November 2025.
So I just want to cover in terms of our test environments is that our test environments from an end-to-end integration perspective will be available from mid-October for clients to enable testing, especially for those clients that, one, have to comply to these highly regulated markets. And just to repeat those again, it's from Bahrain, Canada, China, UAE, India, Japan, UK property, and USA tax. Those markets, if you're making payments to any of those countries, the regulation from a strict compliance perspective is structured address needs to be complied with from 22nd November this year. So testing in our environment can be arranged from mid-October from an end-to-end perspective, but clients are welcome to send us files as and when they are ready, so that we can actually eyeball them and give them feedback with regards to that. So I think that brings us to the end of our presentation, and maybe we can stop and just take any questions that we may have in the chat, or open it up for any other client questions that we may want to entertain.
We have a question from Esther Reed, and she wants to know, how do we go about to arrange access to GPI Tracker?
Okay, so GPI Tracker, and I'm presuming that Estelle's positioning here is that they're not a Swift user. So if you're not a Swift user, then you would be requiring our online platform access for us to enable you to use Swift GPI as a capability, and using the reference number, as Annika mentioned, the UETR number to track the payment. So I think reach out to your transactional banker in terms of understanding this has already been enabled into our new platform called Business Online Plus, and it will allow you the ability to track payments through that platform.
Okay, Alan Vasahi is really encouraged by this presentation, and he also wants to check whether clients who haven't yet adopted these standards, will they still be able to submit their payments?
Yeah, I think the key component with regards to this is that the milestone being 22nd November 2025 enables the requirement for either transition to a hybrid address or a structured address, while unstructured will still be accommodated. The issue is the highly regulated markets, and I'm going to repeat those again in terms of Bahrain, Canada, China, UAE, India, Japan, USA, tax, and UK property, requires for our clients to provide a structured address and a purpose code for the transaction. Now, these elements are what we will kind of make sure that they've been populated with data. We're not validating the data correctness and quality. We'll pass on what clients send us, but the beneficiary bank has ultimate kind of say on this, on whether they would receive and also transition and process that payment. If they're not satisfied, for example, we have clients that have almost repeated, and Annika mentioned this, it's like almost saying the street address, address line 1, address line 2, the same data is copied and pasted across it. It may not make sense. When the beneficiary banks receive this, they have got the final say. So we will receive the data, we will send it across, but if it fails, it will fail at a beneficiary bank perspective. And that's where the compliance would be required in terms of providing the necessary data.
Yeah, and just on that, Priya, and what we want to highlight is that the quality of data will determine if a payment can be actioned immediately or being placed on hold or even rejected. And you know, when a payment is placed on hold, it does mean that we need to reach out to our clients to obtain certain information and then provide that information onto that beneficiary bank again, and that could be a delay from anything between a day or 2, 3, 4, 5 days. Some markets will even say if they don't receive the data within a couple of hours or 48 hours, is that they will just reject the payment and return the funds. And for us, that is what we're trying to say, is that we are aware that there's a shift that's happening. We are aware that a lot of markets are tightening their grips or understanding around the quality of data, and this is to make financial ecosystem more secure for clients to use, for banks to use, to protect everybody on the financial ecosystem from fraudsters and the movement of funds for terrorist funding and human trafficking, etc. And this is what we, you know, as financial markets, what we're doing is that we are in partnership when it comes to those things. It's very important to us, and it's very important that we protect our clients and advise our clients on these changes, because we would like to ensure that your payments do reach the beneficiary's account for your business to move forward as well, and that there are no delays because of quality of data. But it's a partnership.
Any other questions, Colleen?
Yes, I would like to know, is the payment purpose code similar to the BOP codes?
Yeah, I think in all purposes, it is the same, but it is differentiated between countries that have a requirement for this. So unfortunately, there isn't, as Annika mentioned earlier, a commonality in terms of the consistency of usage of these codes across the different countries. I think ultimately there will have to be, in terms of ISO standards, there will have to be an introduction with regards to that. At this point in time, in those countries that are requiring for this to be complied with, they have a set of their own codes, and that has been augmented on our specifications to provide our clients with that data, and also will be enabled within our online banking platform to choose which is the purpose code they're making the payment for.
So Lorraine is asking, what happens with beneficiary company names that are too long to fit in the character space?
And this is where ISO is adding. It's a great question. Thank you for that question. And this is where ISO comes in, because currently there's a limitation in terms of character. And with ISO, no, it's actually doubling up the length and makes it easier for those very long company names or persons' names, individual names, to be added and being provided. So I think it actually does solve for that now.
So I think in terms of the standard with regards to ISO, there is a expansion of the field that requires for the data to be complied with from a size of field. But also it requires for our systems to be updated with that. And I think through this initiative, that's what's happening to cater for this extended names. As I'm going through, I think Colleen says that there's no other question. Just one other kind of element that came to mind as I'm going through this, and this is probably covered in our frequently asked pack that we put together, and we'll submit this for distribution to the attendees of this webinar after the meeting. So the presentation and also the frequently asked question pack will be distributed to all the attendees. One of the things that maybe we didn't go too much into is that the specifications of the file formats that support the XML format has been augmented. So the Paine 001 version 3, for those that are quite technically affair, that the XML Paine 001 version 3 format has been augmented to kind of cater for this. And there's been new formats that is in the Paine 001 version 9 that's been enabled. Equally, other formats that we support has been augmented as well. And that is detailed in the frequently asked question pack that we will distribute after this meeting.
And maybe we can ask the clients a question.
Yeah.
Would there be an interest in having a little bit more of a technical discussion around this? And if you would like that, if you can maybe just put on a Q&A, just let us know. Or if you would prefer to have a webinar session like we are having today, or if you would like a one-on-one with us through your transaction banker, of course, where we can go maybe into a little bit more detail, just to share with you the changes that we are making to make sure the format that's being used today, that it meets the minimum requirement in terms of structured address and the purpose code. So please let us know, and we'll use that as a guidance in terms of what you would require from us. Thank you.
Yeah, I think in closing, the last element that I would actually kind of advise is that we have and are undertaking an analysis of our clients' data processing over the past number of months, from a 12 to 18 months timeline, to understand where you may have done payments in the past and whether you impacted by these stricter compliance from the countries that are impacted for 22nd November this year. And your transactional bankers will reach out to you relative to the impact that we are foreseeing relative to you and your past history in terms of the payments. These may have been once-off payments in the past and may not reoccur, but at least we have an understanding that you're aware that you've made payments of this nature in the past. And if you're planning to do these kinds of payments going into the future, that you need to take this into cognizance in terms of what you need to be prepared for, either from an online host or perspective going forward. Thank you.
Thank you. Thank you, Preggy.
I think we can close off there if there's nothing else from our clients. And hopefully this has been a valuable session that gives you information, and our transactional bankers and dedicated consultants are available for any inquiries from yourselves in terms of any other clarity that you may require. Thank you.
Thank you for your time.